All right, welcome back to video 4. Now we're going to talk about the most interesting part is the math. Now for this one, I'm going to do a lot of math. We're going to do it fairly quickly, so feel free to pause and rewind and fast forward as needed. The math I'm doing is a sample, an example based on my experience. As I said earlier, your experience is probably going to be different because you're probably looking at different properties in different areas. I want to share this spreadsheet with you so you can build your own spreadsheet that's going to allow you to accurately calculate your return. So when I do my investments, I use this exact spreadsheet. I use this spreadsheet to hit a criteria. Depending on the time in the market, I have different criteria. Most recently, I wanted anything that we bought to be over 6% return to us. So I'll show you how I got to that. If the market's hot or cold or left or right, it might be different for you. Also, sometimes we're looking at a property that has non-cash flow value. Maybe there's land value for future ADU or future development, or we think, geez, this will really appreciate in the long run or in the short run, or we think these rents will go up quickly because something's happening interesting nearby. That being said, don't fall in love with a narrative, right? A lot of these things are already priced in. If something good's happening, it's probably already into the price. I want you to be about 90-95% focused on immediate cash flow returns. So what we're looking at here is a very basic cash flow calculator. I keep all my assumptions very simplified. I'm not going to, and I don't even want to try to capture every possible good and bad thing that's going to happen with the property. Every time I buy a property, I adjust as needed my assessment, but I know that every property is based on roughly the same sheet, and so I know that as a baseline, I'm working off the same numbers. So everything here is just completely for illustration purposes only, and I'm sure that when you watch this, the numbers or assumptions will have changed, but what's great about this is you can change your assessments in your spreadsheet as needed. And I'm keeping things very round just to make the math easy to comprehend. Obviously, that will not be the case. On here, you can see that the purchase price is $1 million. Why? It's just a very simple number. It's extraordinarily unlikely that you're going to buy a $1 million rental property. The vast majority of properties I rent and sell to clients are for far less than that. So there we go. Okay, $1 million, the average down payment on a $1 million property is 25% down. That means you need $250,000 of cash. That can be your own cash, that can be line of credit, that can be cash out refinance money, or a combination of any of those pools of money. But you're gonna need to write a check for that much. Okay, that means obviously, hopefully we didn't lose you yet, $750,000 in loan, okay? On the side, you can see that I've estimated a 4% interest rate. That rate may be different today. It probably is different. So that rate will dramatically change your outcome. Lower rate, higher return, higher rate, lower return. Pretty simple. I've created a field to calculate the interest. If I do an interest-only property loan, I want to know what the interest is separate of the principal. Also, the principal is a form of profit to us, so I'll show you that later on. Management, I keep as a blank. I manage my own properties. I don't bill myself or account for that. Some people do. I will tell you when the average management fee is 6% and you're targeting a 6% rate of return, you will go to 0 on your profit margin if you are paying a management company 6%. Simple as that. Here are the property taxes. This is based on the California rate of 1.25% paid annually on the property. If you're in a different tax area, you have to adjust that number. For insurance, I've estimated $200 a month for insurance. So this is all monthly. Everything on here is a monthly number. What we're looking at is monthly return. The insurance may be different for you. I don't know. You should check with your insurance broker. The next item is interesting. I've put this down as HOA and/or repairs and maintenance. Now, if I'm paying an HOA, great. If I'm not paying an HOA, it's a house, I probably have repairs and maintenance costs, right? When I have an HOA, my HOA properties have far smaller repairs and maintenance. Why? I don't own most of the plumbing. I don't own the common area. All I do is I pay the HOA dues, and I usually have some plumbing bills a couple times a year from those units, right? Now, the next line item is the principal. I've just very roughly estimated the principal at $750 a month. Now, this is a profit. This is a taxable profit to you, but you are not touching it. You don't get a check for that $750 every month. That goes as an amortization, right? It reduces the principal. If you do an interest-only loan, that would end up being profit to you then. But on an amortized loan, you only see that when you sell or refinance the property. Good? Okay. Now let's get to the good stuff. What's the profit? So in this scenario, I've estimated a monthly rent of $5,000. We'll play around with that number. At $5,000, you can see there's no profit to be had on this property, except for the $750 a month that we're getting from the amortization of the principal. That's a total of 3.6%. So what I would do is look at this one of two ways. I would say this property does not meet my standards for purchase, and I would not buy it. Or I could do one of two things. I could offer a lower price, or let's run a parallel example where the rent was actually $6,000. Now, as it happens, I think that you need to be looking at a minimum of about $5,000 to $6,000 per million per month in income to make a property worthwhile. As you can see, $5,000 is too low. At $6,000, we're getting actually quite a nice return. So in this scenario, $6,000 a month per million, it's a $1 million property, is a great return. If it was a $500,000 property, that would be $3,000. If it was a $2 million property, that would be $12 million. Now, the rent being higher in scenario B, I don't actually have to adjust any of my other numbers except for my profit. In this scenario, not surprisingly, I'm now generating $1,000 a month in profit, which is an annual profit of $12,000. Now, this first rate of return, 4.84%, that rate of return actually is the cash flow. So I'm getting 4.84% of my cash back every year. So I put in $250,000 and I get nearly 5% of that back annually, right? The next line is the principal reduction. I get 3.6% of that $250,000 back every year. If I did an interest-only loan, I'd be getting all of that back as a cash flow profit. When you combine those two, you get to an 8.44% rate of return. I find generally that that's a very good rate of return, and if you were looking at property, that would probably be a property you would want to buy, assuming nothing else crazy is happening with the property. But if you could find something that generated an 8.44% rate of return and you liked all the other metrics on the property, this is probably a buy for you, right? Now, if you're looking at trying to generate $5,000, $10,000, $15,000 a month of income to offset your lifestyle expenses, making $1,000 a month profit on one property or even close to $2,000 a month on this property with interest only is going to be a huge dent in the way of you finding your way to that financial freedom point. So you can build your own spreadsheet in Excel or Google Drive or any similar product. I want you to build your own. I want you to know these numbers inside and out. I want you to be able to work with these numbers inside and out so you can quickly calculate these returns. I'll show you one last thing I do with it. Let's change that rent back to $5,000 a month, like in the first example. If that was the rent, let's say it came with a tenant or we knew that was the market rent, I could just play around with these numbers and say, well, what if the purchase price was really $950? Nope. At $950, I'm still generating under $200 a month cash flow plus the principal reduction. That's not going to work for me. What if it was $900? At $900,000, we get to $362 a month profit plus $750 a month principal, just under 6%. I think at this rate, it would be beginning to be interesting to you as a buyer. You may want to go interest only here that would generate for you over $1,000 a month on this purchase. And I think that would probably be the midpoint, entry point of where you'd want to look at for rental properties. That being said, it's not always the case that someone's going to just cut their price 10% for you, so you may need to find another property. But that's something for you to discuss with your local real estate broker. Now, once you build this spreadsheet, you can continue to adjust it. You can modify the assumptions. I use some assumptions about taxes, insurance, and maintenance that are based on my experience. Your experience was probably different. So continue to modify and adjust this as you go forward and see how this works for you. But by having this available to me in Drive, I can quickly pull this up anywhere on my phone if someone calls me with a property and calculate exactly what a property is worth to me. By doing this, this allows me to stay on target for my goals and will hopefully allow you to stay on target with your goals also. Thank you for watching those 4 videos about investing in real estate. There's a lot to learn. I hope that you got a good foundation of knowledge to go to the next step with. Remember from the videos we talked about, the next step is really to talk to a mortgage broker, mortgage banker, and to find a local real estate agent that can help you. If you're in the LA area and you'd like to talk further, feel free to give me a call. My information is down below. Or if you're somewhere else and you need a recommendation to a qualified broker or lender that works with the investor market, just reach out by email and I'll connect you to the right person. If you have any questions, feel free to shoot an email and I'll try to get back to you as fast as possible.